Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A reactionary key reversal up yesterday. In some ways a surprising reversion back up after two relatively calm days heading lower, and with a close over the significant February and March 2017 lows at 104.92. The market earlier seemed cautious about testing the top of the still influential upper time, currently 104.30, of the broken January to May 2021 bearish Andrews pitchfork, and this proved it with prices coming ever so close to it but then being rejected back up. Now, I would normally retire such a pitchfork after two consecutive closes over or under it, but in this case I've made an exception, not just because of it becoming support, but for two other reasons. Firstly, this pitchfork had been broken many times on the lower time, currently at 96.85, yet each time it has repaired itself. Secondly, because of its long life, over a year and a half. I think there's more to give from this pitchfork, so I'll keep it on here for a little while yet. Just below the upper time is the support of the congestion zone, 103.38 to 103.69, which currently also contains the long moving average, currently 103.47. Meanwhile, above we have the old target X2 at 105.35. This is the primary target from September to date ascending wedge pattern, currently at 99.83 to 102.58. This pattern is highlighted in dark blue. A secondary harder to reach target X3 is a little higher in the 107.65 area. We still have overhead the penetrated April 2017 low at 105.68, then the 2020 low at 106.35 and the April 2020 low at 107.25 before we reach target X3. And the May 2020 low that is just above that is at 107.66. Now, one final point. We're about to have a golden cross of the rising short medium moving average, currently at 100.53. Moving up over the medium moving average, currently 100.58. So far today, a dip to the basing action support of the February and March 2017 lows at 104.92, seemingly to gather ammunition, but they're not really using it on any real move higher as yet. Cable, aka sterling against the US dollar. A reactionary bullish engulfing pattern yesterday that was somewhat predictably based on the declining long moving average, currently at 121.13. Interestingly, the rise did not manage to push up over the June 2020 low at 122.48, which it had seen action over for the previous four sessions. This might be something to watch today. It was nevertheless a move and close back up over the Fibonacci and other base congestion in the 121.5 area. A little low we have support from the May 2020 low at 120.73, though I am dubious on how good that is. And then the rising upper trend line, currently 119.41 of the late September to late November ascending wedge pattern. Now I've highlighted the relevant trend lines for this pattern in dark blue. That's to help visualize what is going on. Overhead, we still have the primary target X2 in the 124.20 area and the secondary hardest to reach target X3 in the 128 even area above for this pattern. Now, so far today, not much. A dip down to the Fibonacci and other base congestion in the 121.50 area. Euro sterling. A reactionary bearish harami yesterday after the previous session's two bullish white soldiers. Once again, there is really no difference in outlook than the prior three sessions. All the targets, primary and secondary ones for the November-based roof pattern, which I've highlighted in dark blue. Well, I had highlighted. I've gone off of highlighting it now. Well, they've all been achieved, and we seem to be undergoing some extensive indecision right now. Below, we have the slowly rising long moving average, currently 85.47, whilst above we have the ever so slowly rising medium moving average, currently 86.29. Though this was briefly breached on the last three sessions. Above this we have the April 2020 low at 86.69, but I suspect the lesser Fibonacci resistance at 86.98 that doubles as the base of the roof pattern is probably better resistance. Meanwhile, below the long moving average we have the April 2021 low at 84.70 and the March to date uptrend currently at 84.57. So far today, well, testing and piercing, well, now piercing ever so slightly the overhead medium moving average, but it's a cautious move higher, and prices have pulled back Next overhead will be the April 2020 low at 86.69, and right now we're looking at a possible bullish double moving to a bullish engulfing pattern, possibly bullish opening white Mariposa as well. We'll see on those. US dollar against the Indian rupee. An interesting reactionary bearish harami yesterday. There could also be a possible shooting star pattern, though I'm not certain as yet whether it would be a type 1 bearish or a type 2 bullish pattern as yet. This comes after the previous two sessions strong bullish patterns, and the reason for it can be only one thing: the overhead cap of the middle tine, currently at 82.76 of the mid-September to mid-November bullish shift pitchfork. You can see the tines highlighted in bright red on my daily chart. Below we now have some interesting support from the open and close area around 81.90, plus the rising short medium moving average, also currently 81.90, and some earlier congestion around there as well. Overall, I had recently looked at the mid-November today action as possibly building into an ascending triangle type pattern. It was early on, but I am still minded to do so, though any primary target has already been achieved, and the harder to reach secondary targets would be close to the all-time high at 83.26. So far today, well, a higher open and an immediate try higher, but not that far, and looking like another reactionary move right now, this time a bullish reactionary harami, bullish double possibly. Maybe even a bullish opening white Mariposa. US dollar against the Brazilian real. A second bearish black crow yesterday, with the market following on from the previous session's immediate countering bearish opening black Mariposa and bearish harami. The market surveyed the whole recent range of supports and resistances from the cap yesterday of the 50% Fibonacci line of the May 2020 to April 2022 move of 527.37. A 50% Fibonacci line that I had repeatedly said is not that good a support or a resistance, along a very close by short medium moving average currently at 527.19. Then down through the medium moving average currently at 522 3/4, and the better looking support of the 50% Fibonacci line of the March 2021 to April 2022 move at 522.76. Prices pushed down through the next support of the lesser Fibonacci line at 520.27, but by then it had run out of ammunition, and we ended up closing right on this lesser Fibonacci line. By this action, it has somewhat alleviated the questions raised about whether last week's weekly key reversal down and the outside month we've had here in November, whether they were any good or not. US dollar against the Mexican peso. An interesting bearish engulfing pattern yesterday. Firstly, it wasn't that big an ask, given that the previous session was an indecisive spinning top. However, what was especially interesting was how it happened right after the recent spectacular rise and with the indecision seen in the previous session, thus making it possibly into a topping action. We shall see if this scenario plays out today and tomorrow. Anyway, prices were again capped on top by the declining medium moving average, currently at 1989.81. And prices dropped down through the usual suspects. The declining short medium moving average, currently at 1972.88. The April 22 low at 1971.68. And the middle tine of the March to May bearish shift pitchfork, currently at 1968.24. The one highlighted actually in dark blue on my daily chart, eventually closing in just below this, though interestingly making the same approximate low as the previous session in the 1962 area. These lows have been prompted by what I said yesterday, some light congestion from the start of November between 1962.5 and 1965, and ahead of the early June congestion between 1956 even and 1964. Overall, from Friday until this past Tuesday, that's last Friday, until this past Tuesday, the market has recovered in two sessions. Let's expand that to say last week and early this week. It's in that time the market has recovered the most, if not all, the declines, the gradual declines seen throughout November. This has got me wondering as to whether the action since late September, including the Times crossover in late October, maybe, just maybe, a possible bump and run reversal bottom. I need to think some more on this. Well, so far today, a slightly higher open with a dip down to that congestion starting around 1962 before moving, well, back up over for a while in the middle time, but then getting hurt and getting capped by the April 22 low at 1971.68. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.